Hello, this is Cryptolyze. I hope you are well on this Friday, November 10th, 2023. It's with pleasure that we meet today to talk about crypto, to talk about BTC, but not only that, we're also going to talk about ETFs because we have a lot of news around Ethereum and that's starting right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will start with the news around Blackrock and its spot Ethereum ETF. So we've had the rumor for some time now, that's it. We have confirmation Blackrock is going to follow the same path as Bitcoin with its spot Ethereum ETF. That's it, it's validated. When I say it's validated, it means that they have made the deposit. We will have to see if the SEC accepts all of this, namely that we are really waiting for the ETF spot. The narrative is strengthening, currently. The fact of seeing Blackrock making a new request for a new ETF, crypto this time once again, we are really in the reinforcement of the narrative of the arrival of institutional investors through spot cash ETFs in which we could see an influx of liquidity. This is exactly the narrative that is being defended, and each news, each rumor that is spreading around will have a strong impact on prices. We saw it clearly, given that we will even see it later in the technical part. We have Ethereum, which broke the $20 thanks to this news. By the same principle, we have Bitcoin, which grows as soon as we talk about ETFs. Spot, BTC, and even the fact that we have a narrative around the potential validation in the 10 days coming from the ETF, 7 days now coming from the ETF, Spot, Blackrock, and even the 12 ETFs, because the general idea, the general consensus of everyone is that yes, it will be validated and that the 12 must be validated at the same time, and that we have a moment which is very important, which will be at the beginning of January, in which we have the last date for the ARK Spot ETF in particular, and therefore if we wants the 12 to be validated at the same time so that there is no favoritism, it will have to be validated before the Q1 2024. Well, we'll see exactly when it's going to happen. In any case, as soon as there is a pseudo-rumor or a Bloomberg analyst who gives his opinion, we end up with a pump, and it is rather positive. It gives volatility to the market, but we remain highly dependent on this news to accelerate. Besides, speaking of ETFs, there is no need to wait for BlackRock ETFs to invest in a form of ETF. You remember Trax? There is always the possibility of investing through Trax. In particular, there is always the possibility of having the 3 ETF that I built, in which you have the top 50, finally a representation of the top 50 because we cannot put everything in either. We will see an ETF that is specialized in Ethereum and one that is really around tech. And we see that we have already had good performances because when I opened them, they were at $100. We see that we are at $146. At the same time, we have a great performance of the total market. And when we look at the state, for example, of the top 50, we see Solana, we see Chainlink, we see Ethereum, we see EGLD, we see Mina, so which are cryptos which have enormously of pump. So obviously we have a very nice valuation with a very nice upward acceleration. So it already exists, we are able to gain exposure, but what we really expect from the BlackRock ETFs in particular, because it is the name that does everything, is that we have an influx of liquidity from users and pension funds that are managed by BlackRock to be able to have the additional liquidity that arrives at the crypto level. At the macro level, we find ourselves on a day which was not necessarily positive. At the level of the SPF 500, we see that we have retraced violently. In any case, we already felt it yesterday at the level of the candle that we had made, which was a candle of uncertainty. We see that we are going to retest key levels. We will have to see is what we break and we count the one below. At that moment, we will have a sign of bearish continuity. Or we manage to hold, and at that moment, we will always look for the 4,230. Which is here an important break if we want to go for a reversal. At the level of the S&P 500, so this is really going to be a key level, especially since we find ourselves on a dollar which is accelerating. I told you that if we held the resistance here it was good, we did have a downward trend at the level of the dollar. But if we consolidated above it, it was going to be really very complicated. We will wait for the weekly close to see, but it is very likely to have a bullish acceleration here to return to test this part. The 107, before either validating a form of range which will last for a certain time, either making a break, doing a consolidation and accelerating, or making a rejection with here a consolidation and rejection to make a bearish acceleration. But here we are still relatively far away. We will be patient and simply wait for the weekly closing and see in the weeks that are unfolding the position of the dollar, especially since we have a change once again in the level of rates. It's the same, we'll discuss it tomorrow. In terms of oil, we are clearly confirming here that we are indeed in a period of support. I announced this to you yesterday by telling you that we were really in a critical level. Either we hold this level there to be able to take a breath and then look a little higher and therefore create a ranging zone certainly between the $75 and potentially the $85, or we consolidate below. For me, it is necessary break a little further. Consolidate below. At that point, we have a return below $75, and I think we will not stay there for long, contrary to what we have experienced here, because we has very strong pressure at OPEC level to maintain. The price above $60, I think they really want to maintain the price of a barrel at the level of $80. That's why they reduced their production. And I think we risk seeing a certain number of announcements if we ever sink too far, or even stay too long below $80. At the level of BTC, we made a big acceleration again yesterday, a very nice acceleration that we could see. Namely that we find ourselves well within the approach that we had specified yesterday with this bullish acceleration. And a decline in the RSI is exactly what we have here, in which we have momentum that is weakening despite the bullish acceleration. So on this, it's a pattern that we've already known. It can last a very long time, so we can continue to push for a very long time. We will have to monitor whether the RSI is still holding this bearish approach, or are we having a form of reversal? That is to say that we are still monumentally overbought at 82, so it could remain for a long time. 82. But it is a sign precisely that we have a form of weakness and that we are carried mainly by news. At the ONE level, when we look at the small time frame, we realize that we really had a perfect acceleration on both. Therefore, the objective of the Fibonacci extension of this movement also until this retracement, we see that we are right at 37,880 before being retested. I am talking about the body of the candle. We were re-retroduced really strongly. We mainly went to retest this oblique. This reflection is very interesting, except that when we delete it and change our way of seeing a little bit, and we're going to look just for the low that was done here, we're going to look at what it corresponds to. We see that we went to retest these highs. So here we have a retest of the resistance, which was once the moment of acceleration has been passed. So this is really something which is very specific in terms of pullback. The question we need to ask ourselves is, do we therefore have a retracing pullback for a second bearish impulse? On this, it will be a scenario to say to ourselves that we would potentially seek the liquidity which is found here and here with the objective 1 and 1.1. That is to say, 34,789 or 34,500. At that time, we would look for the levels, namely that the low which was carried out did not go hunting. Precisely, it is that water, nor is that water. So we still have the liquidity waiting for it here. But this liquidity has not gone hunting, so we are still in a dynamic which is bullish. DIE agreement. So here we retested a support. We made a pullback. Are we really going to have a break here of this support and an invalidation of this acceleration? Bullish there. Or are we really in a very good zone to make a bullish continuity and in fact continue the movement, the flow in fact that we triggered with the breakdown of 32,000? So on this there is another level which is interesting. It will be here to simply resume this upward acceleration, because if we consider that there we also have a movement with a retracement to determine this new movement, it will have to watch the retracement, which is performed on this movement. Classic. So we pull a Fibonacci. We see that we didn't go to 618, we didn't go to 786. Okay, so at this point, I'm going to ask myself the question, isn't it a movement which is entire? Therefore, which is just on this acceleration here, therefore, at this moment, the retracement that one would be a retracement of the total movement. It's interesting to see that we hit the 618 right on the dot, almost to the nearest cent. So we have a level that is really defended, I think, by this zone for bullish continuity. And therefore, for me, we would be more in a form of pullback on this entire movement, to then make a bullish continuity. So at that moment, we could project ourselves as follows by going up our Fibonacci extension and our retracement extension to give us a target here. 1 in 1, 1 in 39,000, 239,600, if we ever had continuity too. However, I think there is a good chance of setting up a form of ranging here in this way, in which we have a range that has been set up here. We break the top of the range and we consolidate and we create a new range here at the top. This is something that is rather classic. When we have a drop in momentum while we have a price that is growing. In terms of dominance, we find ourselves on a retest once again of 52% because we have Ethereum, which is growing mainly thanks to the news from Blackrock. Here we can clearly see that we have this very nice acceleration with this very nice candle which has been carried out, so for me we are in something which is rather classic. So we have a confirmation of the support. And there, the ETC-BTC differential shows us that we do have an outperformance of Ethereum compared to BTC, so the upward movement of BTC does not correspond to the upward acceleration of Ethereum, which is rather positive. When we look at Ethereum, we broke the halves, so it was really a price that was really strong, and which had a really very strong resistance. And here we are going to retest the high that we had in April 2023, which was really very important. There, clearly, if we manage to break it, I can tell you that it will really be an acceleration also in terms of theorems. We certainly risk going to retest the 2,500 quite quickly, so certainly a single candle. Or even maybe 2 maximum weekly. I even think that it risks being carried out in a single day. So we really have a signal there that we will have to monitor if we still have this break at the level of the Ethereum. The problem is that we are supported by news of an ETF filing but not the validation of an ETF. So for me, we are still in something that is different. Once again, we are in the process of buy the rumor of the validation of the spot ETF. So we always do. Pay close attention to this typology. We are going to come back to BTC. Just on the liquidations, we can clearly see that the bullish movement has liquidated the shorters. We have almost no more shorts. There we see that there is almost nothing left, and we have made a small bearish wick. We see that we liquidated absolutely everything, but we did not seek the liquidity of the low that was there. As I told you, we maintained this low. We protected the 35,000. So this is a relatively strong signal for me to take into consideration. When we look at the liquidations on Kingfisher, we see that yes, in fact, we hardly have anyone in shorts anymore. And this has already been the case for some time, but it is really in the process of being validated where we has less and less short. So implied, we have less and less possibilities to go for short squeeze to have impulsive movements too. So we are only characterized now by spot buying, buying pure. So on that, we will have to see if the levers will come into play or not, especially since we still have a big liquidity pulse below 36,000 which is being created, but it is not enough to be able to push. When we look at the CVDs, we see that we are still very, very aggressive. Despite here the retracement that we have a spot CVD which is really very aggressive. So we are in the process of buying this market. This which is rather positive, something that we did not have precisely in the first phase of acceleration. And in the retracement phase, we did not have these very straight movements with a consolidation on top. We will see whether we consolidate in this way, that is to say with 2 accelerations, therefore retracements, accelerations, then afterwards with something which is erased, or are we going to maintaining this level? It will be really very important. To what extent the pressure of the aggressiveness of the market will be felt, this is what will determine whether or not we will break higher. In terms of order flow, we still have quite a few things. We have the open interest, which is still in the socks. I'm just paying attention to that we have an increase in the open interest, and we therefore just break this little candle there of bullish acceleration, and retracement has done very badly at the level of open interest. So we simply cannot manage to have an open interest that rises. So that implies that the levers and the investment through the levers is not done therefore, whether it is short-term or long-term. Therefore that means that the large majority of the levers that we have are short-term levers, and this is what can lead to cascades of liquidation that we always pay close attention to the positions of the top traders. We see that it has done a lot of harm here from the bullish acceleration and the retracement. So I think that we liquidated a large part of the hedging positions that we had here precisely with the bullish acceleration, and therefore we find ourselves on a valuation of the increase in the positions of the top traders. So for me, the hedging has jumped here. We will have to see, do we have a reconstruction of hedging or do we have support? And this is where it will be really important to determine. We always find ourselves in this descending pattern for a hedging construction as we follow the price, or do we stay on something which is ascending with a support of the price at the level of the positions of the top traders, and that will be more of a signal. Bullish if it ever validates. I hope you liked this video. If so, don't forget to leave me a like and a comment, and we'll see you at 13:30 for Theta.